In today's video, I'm gonna share with you guys an indicator that called the 1987 top, the 2000 dot-com bubble burst, and the dot-com bottom. Now, you're not gonna wanna miss today's video. We've been talking about this indicator quite a bit during the live stream. We call it the 9 count, and it was made by Thomas DeMark. We're gonna cover exactly what the indicator is. If you wanna make sure you don't miss the next live stream, make sure you're subscribed and you have the bell notifications turned on for all. But let's talk about this real quick. And this is very important. Somebody during the live stream named Larry brought this to my attention, said, Mike, you got to put this indicator on your chart. Now, on this post right here, somebody says it's about 68% accurate based on individual stocks and 75.6% based on indices. Then I found another website that also says the indicator we're going to talk about today, a recent independent backtest of DeMark sequential signals showed them to be around 70% accurate across the broad range of instruments. Now, do I know that to be true or not? No, but I have been watching it over the last several weeks during the live streams. And here's an example right here. I'll try to zoom this up within the edit, but you can see we get a 9 count right here. What happens after the 9 count? The market pulls back. Now, normally after the 9 count, we expect one of two things, either a consolidation or the market to pull back just a bit. Now, let's talk about real quick what actually makes up the 9 count. How do we know when the count gets invalidated and when the count is actually validated? And what it's going on to say is bar number 1, so this being bar 1, must close higher than the bar four bars back. So 1, 2, 3, 4. We can clearly see bar number 1 is higher than the close of 4 bars back. When we get on bar number 2, then we count back 4 bars again. 1, 2, 3, 4. We can clearly see that bar number 2's close is greater than the close from 4 bars back. And then we do that all the way up during the sequence. And this isn't just a one-off event. Let's go over real quick, and we're going to put this onto the NDX. And I'm going to show you guys this works across multiple time frames. Let's go ahead and look on the monthly chart. Now, if you guys were trading the markets back in 2022, you know we had quite the decline down. And on the monthly chart, look what essentially called the bottom. We had a 9 count. The market rallied up. We get a 9 count here. We kind of go sideways for about 2 or 3 months, and then we bust up. And what's very interesting is on the monthly chart, on the NDX, look what we have. We have a 9 count, and we've been stuck up in this area. And for all intents and purposes, we have not went substantially higher. However, no indicator, no signal out there is going to be 100% accurate. But I do think this is a very interesting tool to add to our toolbox. We zoom back right here. You might say, well, Mike, that one didn't work. Hey, well, did it or did it not? Because we kind of consolidated around that area. Now, let's go all the way back to the stock market crash of 1987. What do we have right up here at the high? Oh, we get a 9 count. Then the market has a huge drop on the way down. And if we actually look from the top of the next candle down to the low of that candle, that was roughly a 41% drop in one single month. And the 9 count right there told you at minimum, be very careful. The market is susceptible to a pullback or a correction. But wait, that must be a fluke, right? Now look when we are right back in the 2000s during the dot-com bubble. What do we get? We get the 9 count. One bar goes a little bit higher, and then down, down, down she goes. Now, as we're on the way down, notice what we get right down here. We get a 9 count. However, the market goes lower. So this ends up being a winning signal. This one right here essentially gets busted. However, with the DeMark 9 count, one thing you do want to focus on is you want the low on bar number 9 to be lower than bar number 6, which is one of the rule criteria we need to pay a little bit closer attention to. And we can see the low on bar 9 definitely was not lower than the bar on bar 6. But during this peak up here was the high, because this is an uptrend, was the high of the 9 count higher than the high of the bar number 6? Yes. Did that signal work out? Yes, we had one more bar that went a little bit higher, but for all intents and purposes, it got us within the ballpark. Then as we scroll down right here, notice at the bottom of the dot-com bubble burst, what actually called the low? Oh, can somebody say it was a 9 count? Then the market went ahead and rallied up. We get a 9 count here and the market goes sideways. Mike, you're telling me this only works on the NASDAQ? Absolutely not. Let's jump over and take a look at the SPX real quick. Now, when we come over and look at the SPX, notice the 1987 stock market crash, we get a 9 count. Boop, we get that big move right back on the way back down. So again, at minimum, if we are long on this move up, At minimum, we should at least try to reduce some of the risk in the trade. Then if we dive down and we start looking at this, let's say on a weekly time frame, notice what we get right down here. What happens at the low of the great financial crisis where the low was put in? Oh, we get a 9 count and the market goes ahead and puts the bottom in and continues to rally up. You might say, Mike, what about the 9 count right over here? Well, let's look at that rule. Was bar number 9's low lower than bar number 6? The answer is no. And that would be one of the signals we would basically want to stand aside. We did have a 9 count here. We get a little bit of a pop-up consolidation before ultimately going lower. So at minimum, let's say you were short somewhere over here and you start seeing a 9 count pop up. Again, it's a great time to go ahead and try to mitigate some of the risk on that particular trade, or maybe look for a buying opportunity in the opposite direction. Now, going back to the dot-com bubble burst, and we're out here on the weekly chart, notice as we're coming down, what do we get right here at the low? We get a 9 count. What happens? Well, the market goes up. We get a little bit of a double bottom-ish pattern, and that ends up being the bottom from the dot-com bubble burst. Now, if you guys join me during the live streams, you'll see me talking about this quite a bit, especially when Larry chimes in. He's more of an expert with this indicator than myself. I have just been recently putting this on my charts, paying attention to it, and seeing that quite often that 9 count does indeed cause a turn in the market, or at bare minimum, a sideways consolidation. Now, if you guys trade with prop firms like Apex, My Funded Futures, or Fast Track Trading, and you would like to support the channel, use my promo code links in the description box down below to get the best deal on those prop firms.